Hey, everybody, welcome to today's episode. So, this one is actually pretty straightforward. It's one of the more obvious things from our side of the business, but I don't think the consumer really understands how this process works. So, if you're shopping for a rate, we want people as an industry to check on rates, and I'm absolutely not saying you should not be doing that, but I would argue that probably 90% of people don't do it right. As simple as that. People call up and say, "What's your rate?" Well, here's a couple of criteria that are actually needed in order to determine what someone's rate is going to be. There is not a one size fits all 30-year fixed rate for everybody. So, FICO score. FICO score, everybody kind of knows that. If you have better credit, you're going to get a lower rate. Pretty straightforward. Loan to value, so that's basically down payment. Someone that's putting 3 to 5% down or using down payment assistance is going to get a different rate than someone that's putting 50% down. Kind of obvious. Type of property. This one can be huge. So if you're buying a condo or a single family, those rates are going to be different than someone that's buying a 2 or 3 or 4 unit residential property. Income. Income is another one of those things that, let's say you meet an income threshold. So now you're considered a first time buyer, and those rates may be better or different than someone who's not a first time buyer. But if we don't know that because we don't know the criteria of your situation, then you're probably not going to know ever be offered that rate as an option. And that kind of drops down to the different programs. So there's bond programs. So people might be familiar with mass housing. There's conventional, but under conventional, there's Fannie and Freddie and multiple programs there. And then there's FHA, VA, USDA. All of those programs, guys, have different rates. So there, again, there's no 30-year fixed that applies to everyone. So when you call and say, "What's your rate?" without all of this criteria, it's kind of like guessing the outcome to the Super Bowl before the game ever starts. You'll have a number. Maybe that number makes you feel warm and fuzzy, but most of the time people start out with that number. We'll call it X. And then they submit all the information. They're all excited, and we'll call that Y. And then all of a sudden, they get a rate that's higher or is different. They're upset. They're stressed out. It's because until you have all that information, you cannot honestly quote a rate to people. So if you're going to call around, you need to have all of this criteria spelled out and say, "This is my situation. Can you please quote a rate?" At that point, you have a much more realistic chance of being close to the final rate that you're going to get rather than just guessing and hoping what people tell you is accurate, that I would argue most of the time is not. So kind of really super important thing that it's okay to shop around. It's okay to call places, but you need to make sure that you're armed with this information before you make those calls. So again, just want to share that. If that helps you or someone that you know, please share with them. And as always, we are here to help. Talk to you soon.